Uh, Good evening, everyone. Okay, so everybody can see my screen, and also just a quick. Okay, let me know if you guys can hear me clearly. Everybody hear me clearly before I start? Cool, cool. Okay, most people is able to hear me. Great, great. Okay, so let's start our webinar tonight. So before we start, just a quick introduction about myself. So my name is William, and I am a senior dealing and also a marketing executive at Phillip Capital Sendirian Berhad. Okay, so before we move into our topics tonight, I want to just uh, do a quick introduction about our companies, just in case some of you are new to our companies. So whatever that we share tonight is only a knowledge sharing purpose and is not a buy or sell call. Okay, so about our companies, Phillip Capital. So previously, our company is called Phillip Futures Sendirian Berhad before we renamed to Phillip Capital. Okay, so our company is actually incorporated in October 1995, and we are a subsidiaries of Phillip Capital's holding Sendirian Berhad. Okay, so Phillip Capital, we are a trading participants of Bursa Malaysia Derivative and also a participating organization of Bursa Malaysia Securities Berhad. Okay, so which means that we offer derivative trading services and also we offer securities trading services. Okay, so with that, we have this license called the CMSL license, which allows us to operate businesses, securities, financial product businesses in Malaysia legally. Okay, we are regulated by the Securities Commission. So our companies, we have 11 different investor centers, which means we have 11 different branches across Malaysia at all these places. Okay, in Sarawak and Sabah, we have 3 branches, and in West Malaysia, we have 8 branches. Okay, so if you are our clients here tonight, I want to say a very big thank you to you. Okay, without you, we won't be able to achieve this. So in 2021, we won 3 big awards from Bursa Malaysia, being the first runner-up as the best overall derivative trading participants, the best institutional derivative trading participants, and also the best retail derivative trading participants. Okay, so yeah, just want to say a very big thank you to you if you are our clients. So our mother companies, Phillip Capital, we actually have offices all over the world, okay, in 14 different countries. So with that, we don't only offer product in Malaysia, okay, we offer products all over the world, from the US, from the ICE exchange. Tonight, our US dollar is actually from the ICE exchange in Singapore. Okay, so we offer products from all over the world, from Singapore, from Hong Kong, from Japan, from Europe. Okay, so now I will move on into the products that our companies offer. So we used to start off with futures product. This is what we offer. Okay, all this while over the past 20 years, and futures can break into 5 different categories. The first one will be the indexes futures. The second one will be the agriculture futures like CPO and stuff. The third one is metal. The fourth is called the energy, something like crude oil, natural gas. They are all under the energy futures. And lastly will be the interest rate futures. So the US dollar index is actually kind of like fall under the category of these interest rate futures. Okay, so after we offer futures, a few years ago, we started offer contract for difference. So contract for difference, basically, it allows our clients to trade Bursa stocks, US stocks at a very, very good leverage. So if you want to know more how contract for difference, in short is CFD, how it works, you can try to contact us privately and we will let you know more about it. And in August 2022 this year, we actually start offering securities services. So our clients can now trade Malaysia, US, Hong Kong, Singapore, and Australia stocks with Phillip Capital. Now, why trade with Phillip Capital? First of all, we are an award-winning brokers and we offer 24 hours support for our clients. So if you are trading the night market and you have difficulties, you have questions, you can dial into our dealing line and someone will be there for you after the office hours. And we also offer advisory services exclusively for our clients. Okay, and also our HQ in Dealing KL HQ, they send out latest market news exclusively for our clients. Okay, and we offer a very wide array of products from all over the exchange, all over the world, that there is definitely something that is suitable for you to trade. Okay, and we have online account opening and it's free of charge. Okay, so at Phillip Capital, we have one-to-one coaching session for people who wants to learn more about financial products, to learn more about trading. So if you are completely new to the investment market, completely new to trading, you can try to book a one-to-one session, coaching session with us. We can guide you through everything. Okay, and we have these free seminars and webinars every month that you can just go to our website to register. Okay, account opening, like I said, is free of charge. You just need to fund in to activate your account. Okay, so for one-to-one coaching, like I said, we covered what is investment, how to invest, and also guide you how to use our platform. And also, if you want the technical analysis coaching, you can let us know as well. Okay, so for our upcoming events, you can try to scan this QR code. It will bring you to our website that you can always hop on to try to check what events we have in the next coming month. Okay, and also we have this is in our website. This is something that we have every week. So for market views and updates, we have analysts from Phillip Securities Research. They will have this section every Monday at 11:15 a.m. that they will go through the weekly views and updates and talk about the latest markets reports. Okay, and also this one, the second one is we have this weekly, also every Monday night at 8 p.m. This is our technical analyst from Singapore that he will go through the weekly trends and potential entry and exits. If you have questions, you can always try to ask during these two sections. Okay, account opening we have online. Okay, you can open futures and CFD account online. Just scan this QR code and you can try to open an account at the comfort of your home. Okay, for trading platform, if you are trading the futures market, we allow our clients to trade with Phillip Nova, which is completely free of charge, no market fee, and we have 90 over different indicators inside. You can buy and sell directly from the chart, as you can see here. Okay, you can trade both local and foreign products under one single platform, and you can set your price alert and everything. Okay, it's a very user-friendly platform. For stocks, we use Points Global Malaysia, okay, from foreign markets, and Phillip Trade for Bursa Malaysia market. Okay, it's also a very quite user-friendly platform. Okay, now just a quick one. Promotions that we are currently doing. So at the moment, we have a promotion on US dollar index futures under the ICE Singapore Exchange. Okay, so as long as you trade more than 10 lots of this US dollar index, we will give you $88 ringgit as a cash rebate. Okay, you can win up to 88 ringgit. And also, just for your information, I think Phillip Capital is the only broker in Malaysia that offer US dollar index. Okay, so if you are monitoring the US dollar, this is the product for you. Okay, so for our social media, we have Facebook, YouTube, Telegram, Instagram, and also this is our website. You just try to search Phillip Capital Sendirian Berhad on all our social media. You will be able to find us. And we usually update our some market news, our promotions, our latest updates on our social media. Okay, and this is our website, www.phillip.com.my. And these are the branches and the contacts. So if you are anywhere near these branches and you want to drop by, you want to call us, contact us, this is our contact. Okay, it's available on our website as well. You can just go to our website to find us. Okay, so now I'm going to move into the main topics tonight. Okay, and I want to introduce our speaker tonight, which is Jose. Okay, Jose is a multi-asset trader who specializes in options, equities, futures, and currencies trading. He has been trading the global market since 2008 and is a mentor for a lot of traders worldwide. Okay, so he guides people how to trade, and he developed innovative trading technology and to teach people how to trade online. Okay, so let's welcome our speaker tonight. Okay. Yep, Jose.
Thank you so much, William, and everyone for attending. I am now in the process of sharing my screen. Let me see if I get the right screen. One moment, I just want to reconfirm that. I think so. You should be able to see my screen. I would certainly appreciate if you could confirm that, William, just to make sure I'm sharing there. Wonderful.
Yes, I can see the screen. Okay.
Wonderful. Good. Welcome everyone to the session. It is my true pleasure to be part of this today. Very excited to join you all. Very excited to join Philip Capital to talk about the dollar index, which is such a relevant market. You're going to have some fun in the process as well, and for sure we'll have Q&A at the end, and everything you need. Just feel free to type on the chat box during the session so we don't miss any question towards the end. Let's make this session count, okay? Before we get started, as always in all financial presentations, I would like to highlight the financial disclaimer you can see on the upper left. It's fairly short, so I'm counting on you all to read it completely. It doesn't take much time, but it's important because, again, we are dealing with money, we are dealing with financial markets, we are dealing with risk, and we need to be aware of what is it that we got in our hands, because the goal, isn't it? The goal is always to create consistency in our results, you know, and be safe. So that would be it for that disclaimer. Now, the title of the presentation for today is Healthy US dollar index retracements after its recent 2-decade high, and what's next for the dollar. A little bit of a long title, and to be honest, there is so much to comment on, because again, the dollar itself, it's you know, it's such a relevant market just by itself. Okay, even if we're not to talk about other things which are related, which we will. But just by itself, it's extremely relevant. So again, very excited. Notice in the title as well, we are talking about a 2-decade high that took place not too long ago. And we are now talking about retracements. If you are following the markets, if you're watching the markets, you may have seen the dollar coming back down after going up very much. And this has created a cascade of effects in other markets, such as equities going back up, some commodities going back up after going down severely. Again, I'm going to be using charts during the presentation, including real-time charts. I will use a few charts on the PowerPoint just to make my point, and from there we will move into real-time charts and you know, again, exploit what's available out there real-time, okay, which is more interesting. Not sure I said my name. Definitely William introduced me very kindly, but you also can see my email address on the screen. So Jose Blasco, my name, my email, jose@traddictiv.com, and you can also see our social media handles on the very left, Trade with UFOs. So agenda for today, I'll have a very quick introduction, speed of the light, because again, this session is about you and for you, not about me, but you know, it's often a question that we are being asked when we present, you know, so who are you? So I'll answer that with a bit more detail, but quickly. And then we'll get into the US dollar, okay? So where is the US dollar at? What's next? Important facts, correlations, fundamentals, you know, what impacts the US dollar, inflation and interest rates specifically is a very hot topic and certainly very important. So we'll talk about this more specifically. And then I'll go over a little bit of showing how I trade the dollar. I'll talk about different applications. Again, I'll use a couple of examples on the slides, but then I will apply that to real-time markets. And on the slide, just so you know, there are more examples than the examples I will cover. So if you feel like having a copy of the slides, you know, you just need to email me or email William, and we'll be more than happy to send that to you. And talking about being happy, I have not one, but actually I got 2 bonuses for you. It's two little extra tools that will be useful for your trading, which I'll explain that towards the end. Questions and answers, we'll keep that for the end, but again, feel free to type as the session progresses, so that way your questions are fresh and related to the topic, so then I can give you powerful answers. And for sure, if you have questions for William, not for me, you know, no need to say that, you know, those questions are to be asked as well. So my name, Speed of the Light. I am a multi-asset trader. I trade all markets because all markets got pros and cons, and in the end, all markets in a way are related. Money flows from markets to markets, right? So Money may come out of gold and goes into equities. Many come out of equities, may go into currencies. So again, my life is to trade, and therefore I am surrounded by multiple markets, which I use based on the rules of my various trading plans, where some are short-term, some are mid-term, some are long-term, etc. Apart from that, I have a very strong passion for teaching, and this together with my very strong passion for the markets, makes me from time to time to be live online, mentoring traders. I am an author, as you can see on the screen as well. So if you're interested in reading, and a little bit of my sharing there, so you can find our book by using our website, tradewithufos.com/book. Our website, as I just said, is tradewithufos.com. You may wonder, what are those UFOs? You may have heard of the UFOs, you may not have heard of the UFOs. It's a patented technology that I myself have developed before being a trader. I used to work in technology, and that's part of me too. It's another passion of mine. So there are certain things computers do better than humans. Processing data is one of them. So when it comes to processing market data, certainly I like to rely on technology to do that more efficiently, because there are certain things that our eyes cannot see, isn't it? You load a chart, and while we see candles on the chart, I mean, there is volume, there is ticks, there is ratios of ticks versus volume, and those ticks happen at different times of the day. And again, I could have a long conversation here about all of this. It's difficult to process the vast amount of market data unless we use powerful technology, and that's, as I said, another one of my passions. So the UFOs, we call them UFOs. It stands for on-field orders. So if you think about it, if you know where the on-field orders to buy are, and you know where the on-field orders to sell are, these are going to be your strongest ever support and resistance price points, because when price gets to that price and the on-field orders get filled, then price will move in the opposite direction, correct? So I'll give you examples of that, even though, by the way, while I am a UFO trader and I love the UFOs and it may be new to you, no worries, guys, because if you are not into UFOs, you are not a UFO trader, the presentation today will serve everyone. I'll make it generic enough, even though I will also share with you guys how I trade, which is me. So I'll provide good content and material for everybody. Okay, so let's make this count, and again, counting on your participation in the form of questions and so on. Okay, so first chart of the day. The dollar index, symbol DXY, also known as the Dixie. This is a 1 month time frame of the Dixie, the dollar index, and therefore we're looking at many years of data here. What you see on the left is basically real time. I mean, it's not exactly real time. We are trading a little lower than 106 right now, but at the time of the screenshot, it was just a few days ago, so that was real time. And if you look left from here, so we are talking about, this amount of time ago, where if you count the amount of candles, right, the amount of bars, each bar being 1 month. So we are talking about when earlier this year, the market was going higher, the dollar index was going higher. We are talking about making that a 2-decade high, right? So the price of the dollar was not trading at that level for 20+ years, right? So it's certainly a very relevant situation that we had in front of us. Now, why is it so relevant? Because I mean, there are many markets that go up and many markets that go down. Recently, stocks, for example, Facebook, or I should say Meta, went down around 70%. So you may say, well, there are other markets moving a lot as well, right? So there are many markets that are very volatile. But why is the US dollar so relevant? Why am I so excited today? So excited today to talk about this? Well, because no matter what you trade, the US dollar is involved in around 80% of transactions worldwide of whatever. So when people buy a flight ticket, when people put gasoline in the car, when you name it, whatever you are purchasing, either for a personal use or company use or corporate use or as a trading, as a speculator or as a hedger, odds are 80% of those things are priced in US dollars. So it's very relevant. So especially because the biggest markets in the world, commodities like oil, gold, they are priced in US dollars. The biggest stock markets in the world, I guess we are all thinking about the New York Stock Exchange, right? The markets in the US, which are the largest one, they are priced in US dollars. The largest bond markets, US is the country with the greatest amount of debt in the world. So the bond markets are huge. Like, you know, a rough statistic would be, let's call it 3 times the size of the stock market. So guess what? They are priced in US dollars. So if all those markets are priced in US dollar and the valuation of the US dollar changes, guess what? There is a direct impact in almost everything, like, you know, let's call it 80% of the things, right? Based on what we said in this slide. So again, I am a little bit of oversimplifying here. I'll get a bit more concrete as we go, but I guess the concept is clear, and it's actually common sense. So think about it. Most markets react to changes in the US dollar as the US dollar either goes up or down. So when the US dollar is strong and therefore is going up, because the US dollar is strong, you need less dollars to buy that product, that market, that thing. Because you need less dollars to buy that thing is going down in value, because with less dollars you can buy it. Why? Because the dollar is stronger. So we've seen in 2022, most equity markets around the world, including commodities, including cryptocurrencies, all sorts of things, the euro that reached parity earlier in the year. So most of the markets have been going down. And why is that? It's very simple. Because the dollar was getting stronger, and therefore with less dollars you could purchase that other thing, whatever that other thing is, 80% of those other things. This is something that, while it's obvious, it's clear, and you know, probably it's not the first time you hear about this. It's something that, in my experience, as I talk to people in the industry in a regular basis, it's kind of like most investors, both on the retail and also, funnily enough, on the professional side, it's kind of like they kind of forgot about it, because there have been many distracting factors out there. Factors like, for example, that in the prior years, cryptocurrencies, for example, have been going up all the way to the moon. We had, you know, the craze of the meme stocks, for example, you know, in the prior years. So, you know, it's kind of like, you know, there was a belief developing out there where certain markets go live on their own, or certain markets are becoming too relevant or very relevant and have live on their own. And they kind of forgot, and I apologize in advance for my very bad Chinese accent, but they kind of forgot that the US dollar is the lao pan. the US dollar is truly the boss, because again, the majority of markets that trade worldwide, they are priced on that currency, and therefore a change on that currency will tend to impact almost everything. And I'm not saying the impact is direct one-to-one, because of course, you know, even the dollar index it's calculated, you know, in a proportional format. So it's not one-to-one to the gold, it's not one-to-one to euro. It's just an index, right? So it's a representation of the valuation of the currency as an average, which is a weighted average. But at the same time, again, overall, if the dollar is getting strong, so I guess you got my point, which is most of the markets will tend to go down. When the dollar is weak, you need more dollars to buy that thing, because the dollar is weaker, and therefore, because you need to use more dollars, instead of buying that stock, buying that commodity and pay $20, now you need to pay $30. Why? Because each dollar is worth less. So because now you need to pay 30 instead of 20, those other products went up. Okay, so it's, again, such a simple concept that it's kind of something that has been forgotten. At least that's my experience when I talk to people out there. And feel free to comment on the chat box if this is something that you heard or never heard before, or if this is something that makes sense or doesn't make sense to you, or even if you agree or disagree. Okay, I'd love to hear more from you about that. Now, fundamentals, obviously, it's a conversation that we have all the time. You know, what are the fundamental factors that impact the dollar? And for sure, the 4 items that we have on the screen are the ones that are the most critical. For sure, there may be very specific cases throughout the history of the market where something very specific is the reason why there is an impact on a currency or any other market. But in general, the interest rates attached to the dollar, which are controlled by the central banks, and the central bank of the US is the Fed, the Federal Reserve. So those interest rates are a key factor that impacts currency valuation. what has been happening during the whole year? Well, the Fed had a decision of increasing the interest rates. Probably all of you, the world is aware of that because obviously it's very relevant, and every single news channel have been talking about it consistently, non-stop. So probably you have heard this before. But so what happened when the interest rates are rising? Well, when the interest rates are rising, next thing you know, instead of, let's say you have Malaysian ringgit sitting in a bank account doing nothing, so you can convert that into US dollar and buy US bonds, which are, I would say pretty safe. And next thing you know, you are collecting an interest rate, which is higher than before, by converting your currency into US dollars. So what happens is that all this conversion of whatever foreign currency into US dollar, it's actually buying of US dollar, is demand for US dollar. And as we know, economic 101, when demand exceeds supply, prices go higher, and therefore an increase on interest rates will very much impact most of the times currencies, no matter which one, and definitely the US dollar, to go higher when the interest rate is going up, and when the interest rate is going down, the opposite is true. The unemployment rate and the GDP is another factor, are two factors to be honest, but I'm putting them in the same category because basically they measure the health of an economy. So if a country is doing very well, typically their unemployment rate is low. If a country is doing very well, typically their exports are doing very well and their GDP is very nice. And when that's the case, that attracts foreign investors, right? So maybe you want to invest somewhere in the world and you are looking at a healthy country where to invest. Maybe you want to buy real estate, maybe you want to start a factory, whatever it is. If that country is healthy from an economical point of view, that will attract investment. And for you to go, for a foreigner to go into the US and invest there, they need to purchase US dollar. And again, back to the same conversation we just had, that is demand for US dollar, and therefore the US dollar will go up. The opposite is true. If the unemployment rate is terrible and no one wants to invest there, so they may leave the US and sell their dollars, or they may not buy more, and all of this would hurt the strength of that currency. CPI and inflation, together with interest rates, it's the big conversation of this year. Inflation, it's of, and this is a little bit of old school, okay, in modern economy, which by the way, I am not an economist, I am a trader, okay, which is a different profession, but in what I'm about to explain is kind of old school economy, and certainly if we have any economist in the room attending this session, I apologize in advance because I am going to oversimplify what the Fed does. It's obviously way more complex. But basically, what the central banks are trying to do in all countries is to control that inflation. So if there is too much consumption, the prices of goods, including food and goods and services which are basic for people, they may go too high in price because there is too much consumption. And therefore, the countries want to find that sweet spot where everybody is consuming, so there is a good vibe and a good consistent input into the economy, and businesses are doing well and they're making money, and therefore they're paying taxes and the economies are healthy. But at the same time, you don't want to go to the next level, which is there's so much purchasing that now the prices are going up for everything, and next people are struggling just to buy something which is basic for life, such as food. Or energy, the price of electricity, things like that. So what happens is that when the central banks realize that this may be happening in a country, so one of the key action points they have to control that is to raise the interest rates, because then taking loans or using your credit card is going to be tougher because it's going to cost you more interest to pay, and then people will think twice before they purchase things, and therefore this will diminish the consumption and hopefully bring back the prices of things a bit lower to a more balanced level, which is healthier for the country. So again, we all know that inflation around the world is to the roof, and there are multiple reasons for that. We may talk about the Russia-Ukraine effect on the prices of electricity and energy in general. Again, we can have a very long conversation about this. But again, long story short, inflation is happening around the world. On top of that, we're just coming out of a pandemic, right? And with all of that, central banks have been increasing interest rates and having the US leading that change. So obviously, this is a key factor by which the US dollar has been going higher. And we can see that here. So on the top, we have the inflation, and you can see how the inflation has been going higher, right? And as the inflation started going higher, notice how for a while, the Fed didn't do too much. But then when it was already up here, okay, and of course, you know, the regulators, typically they will act a bit later. It's not like us traders will react on time. Regulators, you know, they gather data, they process the data, they publish the data, maybe one quarter delay, things like that. And then you can see here how they have been increasing interest rates. And as they increase interest rates, notice now how the inflation is going kind of sideways. So they're trying to mitigate the problem of prices increasing by raising the interest rates. And you can see here the effect, at least in this initial few months. Now, the effect on the US dollar can also be seen very clearly here. This is basically starting on, you know, 2022, as you know, the interest rates have been increased. You can see the direct effect on the US dollar going parabolic, making that 20-year high that we talked about before. Okay. Now, while all of this is true and fundamental factors are absolutely critical in understanding the markets, the reality is that when we trade, when we speculate, when we hedge as companies, so we also need to keep in mind, you know, what we call market timing, what we call entries and exits, what we call support and resistance. So again, markets go up and markets go down. Even though this is a very parabolic move, this is an incredible move, to be honest. And of course, fundamentals are a key reason behind that. The reality is that nothing goes to the moon in a straight line. You always have these ups and downs, impulse, correction, all that kind of moves. Okay, and again, probably it's not the first time you hear this. So in my case, okay, and I didn't mention it here in that chart, but you know, maybe you were looking at this. You know, those are the UFOs I was talking about. Okay, so green UFOs are UFOs where buy orders are expected. Red UFOs are price zones where sell orders are expected, sell on field orders, sell UFOs. So if I zoom in and I look at a weekly time frame, so you can see how here between 110 to 115 we have a sell UFO, and while they have been raising interest rates, price came to that red UFO, right, and started going down, then came back up, as you will see in the next chart. And also here below, between 107 and 104, we have buy on field orders. Okay, so you know, those on field orders to buy or sell are potential turning points. These are, you know, beyond technical analysis or beyond fundamental analysis. There is a force in the market, which is what you may want to call order flow, where without orders in the market, price movement would not happen. Okay. An extreme example of that is, you know, let's say something crazy happened, but the market is closed over the weekend. So even though something crazy just happened, let's say the founder of, you know, the founder of Tesla, Mr. Elon Musk, let's say something happened to his health and he's in the hospital. Okay, so probably this is gonna impact the prices of things, but nothing's gonna move over the weekend because orders are not being filled. Now, the moment the market opens and it's weekdays and the market is open and orders are being filled, so the price movement will take place. Okay, of course the fundamentals may impact which are the orders to buy and which are the orders to sell and at what prices they are. That may be the reason why they're there in the first place, but without the orders nothing would happen. So right now with the UFOs, we are spotting those on field orders on the US dollar, and you can see how later in time the US dollar came here to, you know, 115 something and collapsed all the way to 105, which is where it is right now, which is inside this green UFO. That's where the price is right now, and therefore, of course, buy on field orders are being filled as we speak, and the expectation would be for the dollar to start rising from now, which, as you now know, if the dollar rises, so what may happen to many other markets, right? And this may be a question for you to answer on the chat box. Okay, so again, I'll be back in, I'll be looking at real-time charts in just a moment. Okay, but conclusion, fundamentals could be a great ally when trading the US dollar index. The US dollar index is very relevant. It's the Laupan, it's the boss. So because of that, it could be treated by itself. Maybe you're a trader who the only thing you do is to trade the US dollar. Later I will show you what is it that you need to do to trade the US dollar. Maybe this is the only thing you trade. Why not? That could be a trading style. So you could do that even if there are not economic reports. I have a trade ready that is basically about to trigger, which I'm going to show you in a moment, which is an intraday trade on the US dollar. So you could do intraday trading with the US dollar itself. Okay, no problem. You can do long-term trading with the US dollar. You can hedge with the US dollar portfolio. You can do so many things. The US dollar is such a powerful odds enhancer when trading other products. So let's say what you trade is stocks. Let's say what you trade is oil, or other products such as palm oil, for example. Again, you may say, oh, wait a moment, palm oil is not priced in US dollar. Okay, well, but don't you think that if the US dollar changes significantly, that will impact the ringgit? Right? So again, it's the beauty of the markets, especially in 2022, is not like in the 60s. In 2022, the markets are all connected. Money flows from market to market, so it's all correlated. And given the fact that the US dollar is involved in 80% transactions worldwide, so looking at the dollar index as you plan any other trade, no matter what you trade, it's a smart thing to be done. Imagine the stock you want to buy to reach a support, and it's time to buy. Let's pretend your methodology gets you buying at support. Maybe you do breakouts, it's different. But let's pretend for a moment that your methodology gets you to buy at support. So let's say the stock you want to buy is trading at support, and the dollar is hitting a resistance. So if the dollar is hitting a resistance and therefore is about to fall, what do you think is going to happen to the price of the stock? Well, probably it's going to go up because now you need more dollars to buy the stock because the US dollar is going down. So you can use the US dollar as a odds enhancers no matter what you trade, but you can also trade it by itself, or maybe the best way is to do both. I just love trading. What can I say? Now, the US dollar can be traded very efficiently using the ticker symbol USDX, which is technically speaking the mini dollar index that trades in the ICE Futures Singapore Exchange. So futures exchange, that's a good thing because that means regulated environment. Singapore, it's a good thing because it's controlled by the MAS, which probably means one of the best regulations in the world. ICE is a good thing because ICE means one of the largest company that controls exchanges around the world, such as the New York Stock Exchange that is owned by ICE, but also ICE got ICE US, ICE Europe, and ICE Singapore. So very good exchange where to trade. And the dollar index, notice that I said SDX is not DX, which is the dollar index. SDX is the Singapore dollar index, and the Singapore dollar index has a special characteristics, which is to be a mini version of the contract. Is 5 times smaller than the US version of the dollar index that trades in the US exchange, which is exactly the same. It's the same price, it's the same thing. It's just 5 times smaller. Being five times smaller, you could certainly be finer when it comes to setting entries and exits, scale in, scale out. You can do many things. And if you are new to trading, and let's say your account is of a limited size, it's very convenient to trade such product. I would say very powerful. I mean, personally, I would see many advantages versus trading some Forex currency, for example, where you are trading over the counter. In this case, you're going to be trading in a futures exchange. Okay, so very, very, very nice indeed. Also, ICE has free data on TradingView, and you can also get not only on TradingView, also on Philip Nova, of course, but also on TradingView you get free market data, which is not the case of other ICE exchanges. So ICE in US, ICE in Europe charges for market data, but not in Singapore, which is nice to trade the mini dollar index. Okay. So anyway, so let's take a look at a trade example. I'm just going to go over a trade example with a chart on the slides, and then I'm going to move to the real-time charts, and you will see what's available out there and how do I approach it. So I'm going to explain a trade example. There are more examples on the slides, which I will not go over. I will go over one example, but again, if you want the copy of the slide so you can learn from more examples, happy to email that to you. Just shoot an email to us and we'll be happy to do that. But basically, the example I'm about to show you will show you the before the trade and the after the trade. So how did we plan the trade? Why? What was the rationale? And then what happened? Okay, and let me tell you that the example I'm going to show you is a profitable trade, because I guess for educational purposes it makes more sense. But know that on the slides there are also losing examples, because in trading we don't make money every trade, as we all know. Some trades profit, some trades lose, and you know, on the slides you get to see as well a bit of trade management and stuff like that. Okay, so you could you know, get your copy of the slides if you would like, just by emailing us. So the before the trade. So here's a screenshot of a chart where the bottom part, this is a daily time frame, and notice how I am using DXY. Okay, so let me switch. This is the slides, okay, but let me switch to TradingView. Okay, so this is TradingView right here. Okay, and here on TradingView, notice I'm using the symbol DXY. Okay, DXY. I could I could open. Let me open a new layout. Let me get you know, for example, a daily time frame, and instead of DXY, you could input SDX, which is a mini US dollar index. Okay, and if you do the ending 1 exclamation mark, this is on TradingView, you get the continuous futures contract. Okay, so here is your SDX. You can see it's the same chart as the DXY. Is the same chart. Okay, it's the same market, it's the same chart. Now, one is the index, the other one is the tradable futures contract. So to plan my trades, to be honest, I prefer to use the index charts and execute on the SDX. So here's an example where I am looking first at the climate. Okay, and the climate, by the way, is a free tool. I'm going to show you how you can get free access to AutoClimate, by the way. It's a free tool for TradingView. And basically, the purpose of the climate is to avoid trouble. The biggest mistake I've seen traders make for years, it's to be on the wrong side of the market. They are buyers when it's time to be sellers, or they are sellers when it's time to be buyers. And while we cannot predict the future because we don't have a crystal ball, statistics, a statistical analysis of the markets could help a lot to add odds in our favor when it comes to identifying, should I be a buyer? Should I be a buyer now, or should I be a seller now? What is the most advantageous action based on stats? That's what AutoClimate does. At the moment in time, you can see that, oh, not like that. At the moment in time, you can see how I got a blue dot. A blue dot means I have a statistical advantage to being a buyer. So now that I know I want to be a buyer, the next question is, at what price? At which price do I want to buy at, and at which price do I want to sell at? So what are my entries and my exits to manage my profit and my risk, and therefore my reward to risk ratio, now that I know that buying is the action that gives me a statistical advantage based on AutoClimate. So notice, by the way, I was applying AutoClimate to the daily time frame, and now on the right, I'm using the 1 hour time frame where I have a green UFO right there. So if the price comes here, I would want to buy, expecting this thing to go higher, and when it goes here to the red, I would want to take profit because sell-on filters will kick in and it may come back down. So I want to take profits before that happens, all the way there at that peak. So okay, so I'm using auto UFOs for that. This is our patented technology I mentioned before and that you briefly saw earlier. I will show you that live in a moment. So again, summary of the trade plan. Okay, we have an entry located at 90.81.5 with a stop below the UFO at 90.68.5, just in case we are wrong, and we have a target located at 91.155, which is more or less the red UFO above. So by doing that with one contract, with mini dollar index, you would have $26 of risk. I mean, even a very small account could sustain that risk, isn't it? And if you want more risk, you just add more contracts. So per contract is, in this particular case, $26 of risk. The reward, if you're right, is 68. So you are dealing with a 2.62 to 1 trade. So if you're right, you're going to make almost 3 times more money than if you're wrong. If you're wrong, you're going to lose a bit less than 3 times more than 3 times the money you would make if you're right. I guess everybody's familiar with that, right? So what happened in this trade? Well, what happened in this trade? So what happened in this trade is that you bought there, okay, which is right there, right? So you bought there, and it went higher, and when it got to this price point, so you got out, and you know, you made a profit. Okay, so congratulations again. In the slide there, you got example number 2, you got example number 3, and I want to make sure you all understand that we traders don't make money all the time, and this example, the third example, is actually a losing trade. Okay, so but again, the point is, as long as you keep healthy reward to risk ratios, even if you lose, it's going to be tiny compared to what you make when you make money, and then that will allow you to survive the trading activity and actually be ahead of the game, you know, as you take your trades. Probably this is nothing new, okay? For the ones of you that are trading, you know about reward to risk ratios, no doubt. Again, one more time, the beauty with the mini dollar index with the Singapore exchange is that you can really manage that risk and make it as small as you'd like or as large as you'd like, and you can trade whichever time frame that you would want as well. So I'm going to jump to the real-time charts to look at what's happening as we speak. But also, I want you to take a screenshot. I want you to scan a couple of QR codes, because I told you that I have two bonuses for you, and I'm going to give you the first one, which is this one. This is actually a 2-hour special training session. It's a YouTube video on our YouTube channel. You can get there just by scanning this QR code, or you can just type the link. But I guess that is difficult to type, isn't it? So just scan the QR code, and that will take you to a video that I've done, where for 2 hours I talk about all the details of the various ICE Singapore products. So you will learn more about, with the dollar index, what are the trading hours of the day, what is the contract size, what is the required margin, all of those things. Okay, so you will get all the details, so you understand the products. And I think that while you could go and take a look at the ICE futures website and get the information from there, probably you would appreciate better to have the content delivered to you like in a lecture session. So here we go. Second is AutoClimate. I told you that AutoClimate is free. To be honest, it's not totally free because there is an activation fee, but for you, it's going to be free thanks to ICE and Philip. You have a coupon code here, claim number 8. So claim 8 to get your climate, and you just scan the QR code. It will bring you to our website, tradewithufos.com/aclimate. You input that coupon code, and it will not require credit card or anything. And you just wait for an email. Our activations team will get you set up. It may take a few hours for you to be set up, but you will be sent instructions, and then you can use AutoClimate in your trading view and do your analysis. Okay, so this is a summary of your 2 bonuses. But now I'm going to jump into the real-time charts. Okay, and we're going to go over this. Okay, so now first thing, I'm looking at the DXY. Okay, on my other chart here, let me do this again. So if I do SDX1 exclamation mark, I want to make sure everybody sees that on the top I have a green dot that says market open. Okay, and when it's green, it means real-time data. Okay, by default, the first time you come here and you type SDX1 exclamation mark, it will be orange and it will be delayed data. You simply need to click on it and select real time, and that will enable the, remember I told you that the ICE Singapore Exchange is free market data, so that will turn on the free market data for you. You don't need to do anything. You don't need to even input your email or anything like that. Just need to click on the what will be a yellow dot for you. You click here on activate real time, and it will become green, just like mine. And now you have real time mini dollar index futures data, which is real time on your trading view. Okay, so you want to make sure you get the green dot. Okay, now the opportunity I was talking about. So let me explain that. Time flies, my friends. Okay, I'm gonna give myself 5 minutes to explain the opportunity, and then we'll jump into Q&A. William, would that be okay if I take another 5 minutes before the questions and answers?
Yes, you can.
Thank you for that. So, so much to share, my friends. I so love this. So on the left, we have the AutoClimate applied to a 30-minute chart. So I'm gonna go over an intraday trade. Know that you could use the dollar index to trade swing trades, long-term, whichever you'd like, okay? But just because we're trying to do something dynamic here, so I'm just gonna go for an intraday trade. So I'm looking for the 30-minute time frame of the dollar index, and I am looking at what's AutoClimate telling me, and AutoClimate is telling me red. So in other words, I have a statistical advantage by being a seller. Okay, that's my statistical advantage. Okay, so I want to be a seller of this market. Okay, so this is the question I got from the left chart, the one that is gray background chart. This one is telling me, I mean, based on how I trade, that maybe you are a trend trader, maybe you are drawing a trend line, and you end up agreeing with me that it's a downtrend and you want to trade short. Certainly, you could be employing all sorts of techniques to trade the dollar index. But if you do what I do, I just don't think. I let computers process data because computers do things better than humans. No emotions, they are objectives, all of that. So I'm gonna run AutoClimate, which again is free for you guys. you get the red dot, and this is telling you you have a statistical advantage for being short. Now, we know this, but the next question, which is critical, is at what price? At what price would you want to be short, right? And now, you may be a Fibonacci trader, you do your Fibs, you may be following moving averages, you may want to trade a pierce of a Bollinger Band, you may trade Ichimoku clouds, all sorts of possibilities, and let's face it, they may be all valid, depending on how you apply them. My trading style is about UFOs. I'm a UFO trader. So what do? On the chart on the right, I got my auto UFOs enabled. I am using an 8-minute time frame. So 30 minutes for the climate, 8-minute time frame for the UFOs, and I have a red UFO right here. So what am I waiting for this to happen here? I am waiting for this market to rally, come to the red UFO, and 105.57 would be my entry. My stop would be located at 105.66, and my target will be the green UFO right here. Okay, which in this case, let's face it, this trade is not the best trade of the year, because if I bring in a calculator and I do some math, okay, so if I bring a calculator and I do some math, so if my stop is, let's say, 105.67, if that's my stop, and my entry is 105.57.8, so that means that I'm risking that amount in points, okay, times the point value of the dollar index, etc. Now, if my target is 105.45, which is the green value below, okay, so I'm gonna make money from 57.8 to 45.5. So how much is that? So 105.57.8 minus 105.45.5, that is 0.123, which is more than what I'm risking, which is 0.092. The relationship is 1.33 to 1. So this trade is a trade where if you're wrong, the amount of money you're going to lose is a little bit less than the amount of money you would make if you're right. If you're right, you're going to make 1.3 times more than the money you put in a race. So to me, it's worth it. I'll take it because, I mean, I know my style, I know my methods, and I'm okay with that, not a problem. Some of you may be like, okay, I have a rule in my trading plan, I need a minimum 2 to 1. So then you need to wait for another opportunity to form, or use a different time frame, and you'll find your trade. It's all good. It's all to be respected. It's all about our trade plan in the end, isn't it? But hopefully this is a good real-time example that is happening as we speak, and you could now go ahead and place your order on SDX and get ready to take this trade. Okay. But anyway, I said I would take 5 minutes, so I guess I will now stop here. And William, I believe that you will want to take the screen, isn't it?
No, it's okay. So we can move on to the Q&A section. Okay.
Okay.
So if you guys have any questions about the US dollar index, you can type your questions in the comment box, and yeah, we will get Mr. Jose to answer. Okay, let me have a look.
Thank you, guys. Any question and comment is welcome, and certainly I would also, out of being just a little selfish here, I'd love to know how the session went for you guys as we're approaching the end of the session. I had this presentation prepared for you guys, but if you have other questions, if you liked it, if you didn't like it, anything, would certainly like to know that. Okay, so as we are preparing other presentations for the future, the more I specifically know what you need, the more I can prepare content and presentations that are useful to you guys. So, yeah.
Okay. There's one question by Isaac.
Yep.
He is asking, are the indicators effective for US indexes or crypto? The one that you shared today, your indicators?
Yes, yes, they are, because the tools that we are utilizing here have artificial intelligence built in, so they actually adapt to the markets that you plot. So in this case, we are looking at DXY, which is the dollar index. If I was to load, let's say, crude oil futures, if I was to load Bitcoin, either the Bitcoin on the crypto markets or the Bitcoin CFD, or I was to load the Bitcoin future. So while it's the same market, that market trades in a different environment with more or less volume, more or less ticks. So, auto UFOs, again, is a patented piece of technology, and it processes all that market data and adapts to whatever you load it. So no matter if it's a Forex pair, over the counter, centralized future stocks, stocks in the Malaysia exchange, stocks in the US, it doesn't matter. The technology will adapt to whatever the market data is and plot where the on-field orders are. So the technology is very, very advanced, to be honest.
Okay, okay. Next question here. How do you see USDX? Is it the end of the bull by Mr. Sam?
Yeah, so to me, I'm gonna look at a little bit of a larger time frame here. So if you, or maybe you know what, I'll do it here because I got the UFOs already. So if I look at the daily time frame of the DXY, so you can see this is a daily time frame, okay? Just to look at a little bit of a wider perspective. So we are currently trading at 105 something here, right? And notice how green UFOs are located below 103. And there is very serious, very, very serious red UFOs above from 110 and above and all the way to 114.78. So definitely there is plenty of space between the green and the red. And therefore my expectation is not that the bull is over, but or that the bear is over, because some people are calling this a downtrend, depending on how you do your trend analysis. To me, what we are entering is a sideways market. So a very wide sideways market where the dollar index is likely going to come to the green UFOs and bounce, and because there is no UFOs in between, there is nothing to stop the US dollar to go way, way higher. And when it comes to the red UFOs, there's nothing to stop it from going way, way lower. And if you think about what we now have, it's a wide sideways market, which is, to be honest, a very easy market condition to trade, one of the easiest ones, because when a market is just trending, it's easy to miss trades because it keeps trending. When a market is not decided enough or is ranging, but it's a tiny range, there is no profit margin. But in this case, we do see, I do see coming a very wide range of a sideways market. So I would expect that for a few weeks it's gonna go down, for a few weeks it's gonna go up, and it's gonna be the tonic into, let's say, the first quarter of next year.
Okay, okay. Hope that answers your question, Sam. So USDX is likely to go into a very wide sideways, which is perfect for traders to trade. Okay, and the trend probably is not. This is not the end for USDX. Okay, it's going into a sideways. It's not the end. Okay, so the next question here is by Mr. Isaac again. The UFO, the auto UFO that you are sharing today, is there any discount codes for that?
There is no discount code for that, but if you go to our website, you will see that there are different options. Like, for example, if you were to enroll in one of our courses, which are extremely affordable on our website, you get 3 months of UFOs. There is also another option. I mentioned earlier that I am a book author. So if you look at our book and you buy it in an e-book format, you could buy it as a paperback book. You can also buy it as an e-book. So no matter if it's ebook or paperback, you also get 3 months of UFOs for free with the book. And the ebook version of the book cost $3.88. So with that cost, I guess there is no need for coupon codes for discount, because $3.88 and you get a book and a course and you get 3 months of UFOs. So I guess it's a fair proposal. So yeah, you will also see lifelong options for subscriptions if you were interested on the website.
Okay, just one last question from myself before we end the webinar slide, which is, in your own opinion, I think from the beginning that you talk about fundamentals of the US dollar index. So in your own opinion, do you see Fed increase the interest rate above 5%? I mean, at this moment, the entire market is talking about 5% is the peak and it's going to stay there for a while before a reverse. So 5% is the peak. So in your opinion, do you think 5% is the peak, or there is a possibility for it to go higher than 5%?
So I think this chart kind of answers the question. Again, we can see the inflation on the top, right, which is now going sideways, and we can see the interest rate below, right? So in the following, the CPI in the inflation is a number that is reported once per month. So as we see the next number to be reported, if the next number, kind of continues this down movement, either sideways or down, probably the Fed may start raising interest rates at a very, very slow pace and may not even reach that 5%. But certainly if we see the inflation to go higher, which could happen, because right now I mean, it's looking like it wants to go down, but certainly the next one could be like that, right? And therefore it would be still an increase of inflation. So if that was to happen, probably you would see the Fed to be very aggressive again with another severe rise. To be honest, I would not be surprised this is going to happen. They're probably trying to calm the world by saying that they may not raise interest rates too heavily. But the reality is that now they can afford it. Why am I saying that? Well, because the dollar has dropped from the highs around 8%. So if they were to raise interest rate by a lot, they would just bring back the dollar all the way to 113, 112, something like that. So they could afford it because, I mean, they also know UFOs are there. So in other words, they would then have the dollar go back to where it is. So basically, they would be adding interest rates to their economy while the value of the dollar would basically, tend to come back to more or less where it is. So the impact that they will create now is less than what they have done since the beginning of 2022. So, of course, I cannot predict the future, and therefore I gave you two answers because there is a what if. So the what if is if inflation rates go up, I believe we will see interest rates going up, and I will not be surprised they go above 5% because of what I said. If the inflation numbers stay the same or go down, then it is very likely that they may do nothing to the dollar, or they may start increasing like 0.25% at a time or something like that, like very minor. So to me, is the next inflation number is going to be the real key one.
Okay. Thank you for the answer. I think that is all the Q&A tonight. Yep, I guess that's all. And thank you everyone for attending, joining us tonight. And thank you, Jose, for your wonderful sharing. So yeah, have a good night, everyone. See you.
My pleasure. Thank you, everyone. It's been a pleasure. Take care, everyone.
Thank you. Bye-bye.